In fact, talking about metals, let's keep our focus to what's really happening within metals, considering it's not about today's move, but most of these metal stocks back home are now sitting at their life highs. So let's welcome on board Peter McGuire as well as Jonathan Bharat, both joining us on the show right now to talk about the prospects of metals as a sector and how lucrative the trade still is, even after the up move that has gone through most part of 2020. Gentlemen, morning. Good to have you on the show. Peter, if I could come to you first. Firstly, wishing you a very happy new year from all of us.
Well, many happy returns and all the very best for the year ahead, and hope we win the third test in Sydney.
Okay. Peter, the rally in metal prices was triggered by China's rapid recovery. Now we're seeing prices cool off in China. Steel prices in China have fallen about 7% as of last week. What's the reason for that, you think?
Well, I think it's probably a little bit exhausted to the upside. We've had a very, very strong rally over the last 3 months. China's come out of the COVID crisis with all guns blazing, and they've seemed to be in a far better position than nearly any other country in the world. So if I'm looking at it from a big picture theme, we've seen a very, very enormous move also with the softening as far as US dollar and the rebound across pretty much all of the metals. So I think just exhaustion, and let's see where the end of or the rest of January takes us leading into that the Chinese New Year.
Sure. Jonathan, hi, morning. If I could get you in on the discussion, what is your own outlook on the global steel prices? US spreads, as I understand, are now above the $700 per ton mark. Do you think it is already factoring in a global economic recovery, or do you sense there could be further headroom?
Look, I think there's going to be further headroom. I think whilst we have that government stimuluses around the world, that you'll see any correction is something that a lot of people will buy into. I guess that the key is that when you look at some of these metals, you really get a sense that the demand is certainly there. And whilst we have infrastructure spends, and note that the infrastructure spends which have been put in place by governments are not ones you can turn on and off very quickly. So I think that any rest we see is just an opportunity. When I look at the spreads, I see there sort of any correction is just a correction as well. Steel prices, once again, just a correction. I think the medium to long-term outlook, while these stimulus plans are in place, suggests that these prices are still ready and can still continue to trade higher.
That's the sort of overall consensus coming in there. But Peter, if we take a look at the kind of outlook now going forward as well, China's steel supply has been quite curtailed, of course. In terms of supply versus demand, what's the picture looking like?
I think that, overall supply side, I think that, all hands are on deck to really meet any demand out there. So I don't really think that we're in any sort of shortfall. We're producing incredible numbers when it comes down to iron ore. And we all understand I think the global positioning that, as Jonathan made reference to, stimulus is going to be front and centre for a number of years to come as we, grind out of the depths of COVID. So the demand picture, I think, is going to be very, very strong. Production, I think, is going to be, all hands on deck. And we've just got to hope from a domestic side here in Australia that we can settle the differences that we have with China at the moment. If we don't, then I'm not sure how that actually plays for the Australian market. But I think globally there's plenty of supply out there, and it just will match the demand.
Jonathan, what about some of the other base metals? There's been a sharp drop in inventory levels of copper, aluminium. What's your view there and the kind of outlook on that front?
Yeah, look, I think it follows the same discussions of why steel prices are high, also why nickel prices are high, iron ore as well. But it's not just a demand thing, it's also that supply side, as we've mentioned. And I think the interesting thing is, if we take a segue and look at the iron ore price, we've seen obviously a lot of demand, as Peter has mentioned, but also look on the fact that Brazil's cut down its production by about 26%. So that in itself, you've got a sort of like a perfect storm where you have lots of good demand there, supply's been cut back, and all of a sudden that demand just pushes prices exponential, and that's what we've seen. I mean, when you look at the copper price, same thing. Actually, have a look at the copper because that's actually showing more of a backwardation in price. A backwardation suggests that we've got that pent-up demand that comes in, it stays here, then over time it starts to dribble off. So when you look at that, it indicates that we've still got that demand there. And I see that story across the other base metals. Obviously aluminium sort of moving ahead, nickel's the same. All these markets are sort of have that area of supply where they have a problem, and as a result of that, prices continue to squeeze higher. I wouldn't be surprised if I see copper prices actually move onwards and upwards, maybe even head to that record about 10,000. That's what the market's going for at the moment. When I look at aluminium, when I look at nickel, they all look relatively good, and I think dips remain something to be supported and bought into to maintain this rally.
Jonathan, China was the big guzzler. Chinese were constructing and China was consuming steel. I sometimes get confused when I look at the data, which is China has excess capacity, China is slowing down, suddenly China needs steel, and suddenly China is importing. It's terribly confusing to understand what the Chinese are doing, isn't it?
If everyone knew that they were buying, they'd just keep buying it. But I mean, there is obviously a little bit of a play, as we know, with any exports and imports. You don't want to know what your supplier is actually thinking. But one thing we do know about China, when they are on the bid, they tend to buy into prices that are moving higher. That's because they're always concerned about prices continuing to trend higher, as we have seen with the iron ore and the copper price. But generally speaking, people know they are buyers. They try to colour it to say that they have that excess capacity, but at the end of the day, I think that's more of a story, in terms of trying to manipulate pricing. But from my experience, when China is on the bid, it remains on the bid until there's some catalyst that suggests otherwise.
When the electric car was invented, it was completely dismissed. No one thought that fuel or oil could ever get challenged, but oil is getting challenged. Do you think we could be in for a similar kind of a disruption even in the entire metal sector? Because the world is getting more eco-friendly. The world is migrating towards perhaps alternates. We know that there is a glut in the Middle East market in terms of construction, and cars, if they move towards the electric world, the cars would be much lighter and they would be much leaner.
Well, there's no doubting that with any advent of new technology, and that's been demonstrated with the take-up as far as Elon Musk's numbers, nearly 500,000 vehicles for the year. That's only going to grow, as we all know, over this decade and leading into certainly from the 30s moving forward. So it impacts so many components, moving parts of a motor vehicle. You're talking about what goes into a car from certainly catalytic converters and the platinum, and you're looking at palladium, copper, all of those components. Are they going to be needed to the same level? And then you're looking at a little bit like Moore's law, as the capacity increases dramatically, traditionally the price halves. And that's what we saw with the chip market, putting our minds back to the 60s. So for, decade after decade, the capacity of the chips just became so much stronger. So I think with rare earths, battery strengths, and the new frontier, it's going to be, in some ways, possibly a little bit of a game changer, as you mentioned. But the overall demand, I think, for anything that really comes out of the ground is going to be very, very solid and strong for, a number of decades yet, because we can't let our minds get away from the simple storyline that we're going to increase our population across the world approximately 2 billion people from where they are today over the next 25 years. So all those extra mouths to feed, capacity as far as the consumption on every angle, from water to fuels to batteries to everything put in between. So, I think the super cycle's onward and upward, and it's a good time for commodities over the next decade or two.
Sure. Jonathan, what's going to be the Biden impact on commodities?
That's a good question. Well, we'll have to see what some people are saying, some of his policies. I guess at the moment, when I look at how Biden's going to sort of come into the market, and obviously we know Donald Trump's sort of still trying to fight that, but I guess once it'll come back to more conservative policies, and I think those conservative policies will see stability. If that stability is there, then it should see more growth. I think the interesting thing here is that some time ago, we always discussed about that competitive nature of the US, and you can see by the weakness in the US dollar that every time that dollar does weaken, we get more of a competitive nature coming back to the market. So for the US, so I think what you'll find is an unofficial policy to enable those exports, and with those to enable those exports, dollar goes down, and with that, I think you'll see more demand. And I also think there'll be more of an increase for domestic manufacturing to occur in the US from Biden. So I get a sense that him coming into play, obviously we've got 4 years, but they will be conservative policies that I think will be US-centric, because we've learned that they lost their election last time because of that. But I think that US centricity in terms of manufacturing should see commodities also maintain a bit of a mainframe there and see demand moving forward, or continue to see demand, and also supply as well.
Sure. In addition to that, also wanted to understand, Jonathan, how is it that you see the whole China-Australia, relationship as well play out when it comes to coking coal prices in particular?
Look, I think that's certainly very topical at the moment. Obviously, we've seen talk and discussions around $14 billion worth of coal, which sort of go on that export list that China isn't. I think the interesting thing here, as opposed to the iron ore, is that China does need it, but they can actually import coal from Mongolia and Russia and places like that. So I get a sense that it is very topical. I think it's really important how the Australian government will actually play that, because that could be discriminatory in a certain way if China just focuses on these exports. But then again, it's a free market. So there's other markets, for coal. So as a respect of that, I expect things to shift a little bit. I think it's still China playing a little bit hardball on some conditions here. Obviously she can, but I guess when it gets to discriminatory nature and it falls back on coal, there could be a little bit of push on a political front. But obviously early days is to see what's happening on that coal front. But at the end of the day, that's a $14 billion industry for Australia. So, if China's going to continue its stimulus, it still needs it. The question is, where is it going to get it from?
Jonathan, Peter, thanks so much. Always great speaking to both of you. Thanks for joining us this morning, and Happy New Year once again.
Same to you.
Thank you.